Okay, so update on the state of the markets right before the open on the morning of February 24th. So this is the beginning of the Russian invasion of Ukraine, unfortunately. And as you can imagine, this is having an outsized impact on the markets. A spike in precious metals, a drop in general equities. But the fact is, this decline started for the S&P on January 4th, and for the Qs, it actually started in late November. So we've been declining for a while now. We've been, I'll go to the weekly chart first. We, so that was, that January 4th top was week 13 of the weekly cycle for the S&P. And you can see here, we're now on week 20. We have officially matched this low that was here on, January 24th. So this, at the time, people were calling this the bottom, and it looked like it could be the bottom. As I kept saying, we could be in for a, December 2018 style decline, right? Where this looks like the bottom, but then look at this bearish candle where we get all this upper wick. And then the next week, we come in, we open here. I'll zoom in on these candles. It's important to understand the structure of the candle, right? We open here, which is what you would expect. We open as an inside week because of this long upper wick. But then we make a nice move up here, and it makes people think we're going to make a new high. And then we fail all the way back down. So we become a bearish engulfing. Well, we almost become a bearish engulfing week, if not in fact, in spirit, right? And then the next week, you have this, you open here, you pop up again, getting people excited. And then we fail down again. This next week, we open here, we get a much less of a pop, and then we just kind of drop, right? And so we're seeing more downside in the future. So we're going to have a gap down opening most likely. And so we're going to make another low. I have to imagine we're going to find ourselves below 4,000 at some point. Given this is only week 20, this cycle could easily go to 23, 24 weeks. I would expect we get our low closer to the middle of March, which makes sense actually when you think about the potential catalyst that's out there of the Federal Reserve meeting, in that kind of area where they're expected to raise rates. So I say there's still money to be made on the short side, even though we may get sort of a temporary bounce here. On the daily chart, we are on day 21, and so this is probably the most important thing to keep in mind. So we're about to open, and it'll be day 22 when we open, and again, it'll probably be a gap down opening. That would put us still, so we're not early in the daily cycle, but we're also not super late. So you can see the previous cycle had a low on day 34, the one before that on day 43, the one before that on day 31, the one before that day 42, before that day 26. You'll notice a pattern there, right? None of those bottomed on day 22 or 23 or 24. They're all at least 25 days long, and in a lot of cases a lot longer than that. And so if that were to hold to be the case, we still have quite a bit more downside. And that makes sense, right? Because we're still not super late in the weekly cycle. So it makes sense that this daily cycle is going to stretch on a little bit longer, and that's going to stretch the weekly cycle as well. So I think there's still more downside here. As I always say, we have to wait for that swing low. And I'll jump to the Qs really quickly, just to same kind of point, except much worse. So notice the Qs are already down, as of yesterday, they're down 19.4%. With this gap down opening, it'll obviously be down more than 20%. In the case of the Qs, we're well below the low of January 24th. We closed below it. And on the weekly chart, as I keep saying, we actually topped out on week 7. And so we've been declining for about 13 weeks now, right? That was that was in late November. And so this is also not super late in the weekly cycle. So we could still have a good amount of downside. I see us easily piercing 297 and that was our, 2 weekly cycles ago, that was our low. It seems likely that we get much lower than that, even given we probably have another 3 to 4 weeks. Again, I'm thinking sort of a mid-March bottom, but we're going to have to watch the price action as it develops.